Many people tend to invest in REITs for their high dividend yields. But REITs are much more complicated than your average company. So I'm here to guide you through all of this and find the best REIT for you. And will it be the monthly dividend paying company, Realty Income? Or will it be one of the newer boys like VICI Properties? In this video I will compare 8 REITs head to head, using key criteria to determine which stock is the best investment. In each round I'm going to give the winner of that round the full 3 points. The number 2 gets 2 points and the number 3 gets 1 point. At the end we are going to sum all of the points to see who's the winner. So without further ado, let's dive into it. Starting with the market cap to see who's the biggest company. And there are some big differences already. Coming in at number 1 we have SPG, claiming the first 3 points here with a whopping 53 billion market cap. Realty Income is closely behind with 51 billion, claiming the full 2 points. And number 3 is VICI with 34 billion, which is a relatively young company, so that's pretty impressive. The smallest company of today is EPR with 4.3 billion. When investing in REITs, you want to pick a company that's capable of growing their revenue with a future-proof outlook. And coming in first we have VICI, with a whopping 33%, which is pretty insane. In second we have Realty Income, who did a lot of acquisitions in the recent years. And in third it's ADC with 26%, also a great number. In last we have EPR and SPG, with 1 and 2% respectively, which is pretty concerning to me. We also want to see that net income is growing at a similar pace. And again, keep in mind that these are very different companies in terms of business and maturity. So coming in first is VICI with an outstanding 48%, which is really insane, claiming the full 3 points here. In second it's Stack Industrial, quite surprisingly, claiming their first 2 points. And in third it's ADC with 17%, which is also a decent number. And there are some interesting things happening here. Remember Realty Income, who grew their revenue at 28%? Well, their net income is growing at only 15%, so margins are decreasing. And what about EPR and SPG? Not too exciting either. So definitely keep your eye on these numbers. Now let's move on to the price to FFO. And of course we prefer to pay a good price for these stocks, and in general the lower this number the better. But keep in mind that price to FFO is just an indicator and not the full story. It works quite similar to the PE ratio for regular companies, but this one is more tight for REITs. And coming in first is EPR with only 11.7, which is considered to be really low, claiming the full 3 points here. In second we have M with 12.5, also looking really good. And in third it's VICI with only 12.6, which is kinda surprising to me looking at the previous rounds. ADC is reporting the highest number here with 17.6, indicating they are at a premium right now. And I prefer 10 to 15 here in general, depending on many factors. Next up is WALT, short for weighted average lease term, the higher the better. And coming in first is VICI with 40 years, which is really insane. And the reason for being this high is due to some tenants they have close relationships with, such as Caesar's Palace, that are exceeding a WALT of 40 years. In second it's WPC with 12.3 years. And it's pretty good, so claiming the 2 points here. In third it's EPR with 12 years, also looking pretty good. Stack Industrial is worrying me a bit here, with only 4.2 years. And SPG didn't mention any number in their presentation, also something that worries me a lot. And now that we're halfway of comparing all of these stocks, it's time to check the leaderboard, who's the halftime winner. So starting at the bottom of the list we have actually 4 companies, which is meaning it's really close. Stack Industrial, ADC, Triple M, and WPC all managed to score 2 points. In third, it's SPG with 3 points. In second, it's Realty Income and APR with 4 points. And especially the latter really surprised me a lot here. And for now, there can only be one leader, which happens to be VICI Properties with a total of 11 points. And let me be honest right here. The distance between number 1 and 2 is really big, with a total of 7 points. But everything can happen in the upcoming rounds. And let me tell you this as well, it's going to be very close. So buckle up and let's move to the second round. Starting with one of the most important numbers to me when it comes to analyzing REITs, which happens to be the net debt to EBITDA. We prefer a range of 5 to 6.5 to secure stability. And since this is a bit of an odd one, I'm giving every company that reports in that range 1 point. And ADC is really close, but I have to draw a line somewhere. Triple M and SPG are looking a bit low to me. And next up is the dividend yield, which for most people is the most exciting part of this video. And it's an interesting one with these companies. Coming in first is EPR with a total of 6.4%, which is looking really good. In second, we have actually 2 companies reporting 5.7%, which happens to be Realty Income and WPC, both claiming 2 points. In third, it's Triple N with 5.6%, which is also a decent number. The lowest number of today is 4.1% for ADC, which is still a great number, don't get me wrong. But there's more, because when looking at the 5-year dividend compound annual growth rate, we see that VICI is top of the league once more with 7.7%. In second, we have ADC with 5.6%. So they might have one of the lower starting yields, but the growth is really on point. In third, it's Realty Income with 3.6%. Looking at the other companies, we see that most are really struggling to get that dividend yield growing. To support this massive dividend and secure the future growth, we want to see high growth in the FFO. And EPR is reporting an insane number here with 438%. But keep in mind, it was really low, and they kinda climbed their way up from there, so it's a bit diluting. Nevertheless, they claim the full 3 points here. In second, it's Stack with a surprising 85%. In third, it's Triple N with 33%, also looking really good. The last metric of today is the total return in the past 5 years. Because what's the point of owning a stock if it doesn't bring you high returns? And keep in mind, the S&P 500 roughly returned 120 to 130% in the past 5 years, depending on which ETF etc. you picked. So there was only one company able to beat the S&P 500, which happens to be SPG, with a surprising 251%. In second, it's EPR with 117%, really close to beating the S&P 500. In third, it's VICI with 103%, which is also looking really good. All the other companies are really struggling here. And with these last points awarded, we have a final score. And just a little reminder, the halftime leader was VICI, who scored an outstanding 11 points. But if you paid a little bit of attention, you noticed that in the second round they barely scored any points. So let's see the rankings by starting at the bottom. Coming in at the 6th spot, we have 2 companies with a total of 4 points, ADC and Triple M. Both are disappointing today, to be honest. In 5th is Stack and WPC with a total of 5 points. In 4th, it's SPG, who had the highest total return. But other than that, it doesn't look really good. Coming in 3rd, it's Realty Income, the good old monthly dividend paying company. In 2nd, it's EPR, who really surprised me today with a total of 13 points. And the winner of today is VICI, with a total of 16 points. And to be honest, I expected VICI to do very well today. It's also one of the reasons why it is the biggest REIT in my portfolio. The company is growing really fast and they seem to be undervalued. There's also not a single area they really lack in when looking at today's metrics. So to wrap things up, what were your thoughts on this list? Were you surprised by the outcome, or did you thought some companies would deliver better results? Please let me know in the comments down below. In the coming months you can expect more videos like this one, so stay tuned. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.